Welcome to Thoughts on the Market. I'm Martin Ratz, Morgan Stanley's global commodity strategist. Along with my colleagues bringing you a variety of perspectives, today I'll discuss the 2024 global outlook for oil. It's Wednesday, the 10th of January at 2 p.m. in London. Around 6 months ago, oil market forecasters widely forecasted a tight second half for 2023 with considerable inventory draws. This expectation was partially driven by two factors. One, OPEC cuts, and in particular the additional voluntary cut of about 1 million barrels a day announced by Saudi Arabia back in June that took the country's production to 9 million barrels a day, about 10% lower than the average of the first half of 2023. The second factor was a positive view on demand, which had mostly surprised to the upside in the first half of 2023. The market indeed tightened in the third quarter, and inventories drew sharply at the time. As a result, dated Brent rallied and briefly reached $98 a barrel in late September. However, this was not to last in the fourth quarter. Demand disappointed, growth in non-OPEC supply remained relentless, and inventories built again. Needless to say, these trends have been reflected in prices. Not only did spot prices decline, dated Brent fell to about $74 a barrel in mid-December, but a number of other indicators, such as calendar spreads for example, signaled a broad weakening of the oil complex. Looking ahead, we expect a relatively precarious balance in 2024. Demand growth is set to slow as the post-COVID recovery tailwinds have largely run out of steam by now. Despite low investment in production capacity in recent years, the growth in non-OPEC supply is set to remain strong in 2024 and probably also in 2025, enough to meet all global demand growth. Naturally, this limits the room in the oil market for OPEC oil. When OPEC cuts production in response, as it has recently been doing, this puts downward pressure on its market share and upward pressure on its spare capacity. History warns of such periods. On several occasions, when non-OPEC supply growth outpaced global demand, eventually a period of lower prices was needed to reverse that balance. However, we argue that is not quite what lies ahead for 2024. OPEC cohesion has been robust in recent years and will likely continue this year. We expect the production cuts agreed to in late November 2023 to eventually be extended through all of 2024, and we don't exclude a further deepening of those cuts either. This would limit the pace of inventory builds in 2024, but probably not prevent them. In our base case projections, we still see inventories built modestly at a rate of about a few 100,000 barrels a day this year, and our initial 2025 estimates also imply a modest oversupply next year. As a result, we see lower oil prices ahead, but again, not a large difference. We estimate dated Brent will remain close to $80 a barrel in the first half of 2024, but may gradually decline towards the end of the year, trading in the low to mid-70s in 2025. That may also support our economist's call for inflation to moderate further this year. Thanks for listening. If you enjoyed the show, please leave us a review on Apple Podcasts and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.